Have you ever noticed how buying a car is treated like a normal step of adulthood? But questioning a car loan feels almost rebellious? In the US and Europe, getting a car on finance is seen as responsible. You finish school, you get a job, you finance a car. It feels logical, structured, safe. But almost nobody asks a quiet, uncomfortable question. Why am I paying interest on something that loses value every single day? Let's make this real. Imagine a young professional in the US earning $60,000 a year. After federal tax, state tax, healthcare, and retirement deductions, they take home about $3,600 a month. In Europe, the numbers change, but the structure stays the same. High taxes, stable salary, limited leftover income. Now subtract normal life. Rent or mortgage, $1,300. Utilities, phone, internet, $250. Groceries, $400. Student loan or credit card payments, $250. You're already at $2,200. Now comes the car. Car payment, $520. Insurance, $160. Fuel, $120. Maintenance, $60. That's another $860. Now your monthly spending is around $3,060. From a $3,600 income, you have $540 left. Not for investing, not for building freedom, just to survive unexpected expenses. And the strange part is, most people look at this and say, my income is the problem. Rarely does anyone say, my car is the problem. Because the car doesn't feel like a financial decision. It feels like a lifestyle decision. Now let's look at the math behind what nobody explains. That $30,000 car on a 6-year loan at 7% interest actually cost you about $36,500. And by the time you've paid it off, it's worth maybe $12,000. So you spent $36,500 to own something that became $12,000. That's not ownership. That's slow financial leakage. And it gets worse. While your car is losing value every month, your money is losing opportunity. If that same $520 per month were invested modestly at 7% annually, in 6 years, you wouldn't have a depreciating object. You'd have about $45,000 in growing capital. So the real cost of the car loan isn't $36,500. It's the difference between where your money went and where it could have gone. That gap is your future. So why do intelligent people make this decision? Not because they're bad at math, because they're human. Cars represent control, freedom, adulthood, social status, safety. A financed car feels like stability. It feels responsible. It feels like progress. And psychologically, the monthly payment makes it seem affordable. $520 sounds manageable. $36,500 feels abstract. The brain understands small payments. It ignores long-term consequence. That's not stupidity. That's how human perception works. The system knows this. Dealerships don't sell cars. They sell monthly comfort. Banks don't sell debt. They sell accessibility. And society doesn't measure wealth. It measures appearance. So the financially damaging decision becomes socially invisible. Now imagine repeating this cycle. Car loan, pay it off. Trade in, new loan, higher payment. Over 30 working years, a person can easily transfer $250,000 to $400,000 of their income into depreciating vehicles. Not because they're reckless, but because nobody framed it as a long-term wealth drain. That money could have built security, flexibility, choice. Instead, it builds metal that rusts. Now let's shift perspective. Financially intelligent people don't ask, can I afford the payment? They ask, what is this money preventing me from becoming? They see cars as transportation, not identity. They separate comfort from status. They choose functional ownership, not emotional ownership. They don't hate cars. They just refuse to let cars dominate their future. A cheaper car doesn't mean a smaller life. It usually means a quieter one. with more margin, more control, more patience. This isn't about fear, it's about clarity. A car loan doesn't destroy your life overnight. It quietly reduces your financial flexibility for decades. And most people never realize it happened. So the question isn't, is a car loan bad? The question is, what future are you exchanging for convenience today? If this way of thinking made your view of money slightly clearer, consider liking the video or subscribing for more calm, honest financial conversations.